I think a lot of Americans are going to find themselves in a major hurt locker. Maybe not in the next few months, but 2013. I've been thinking about some stuff, and I want to comment a couple things on. Actually, I checked out I kind of skipped around it actually because I usually don't listen to him anymore. Brother John F. video. I kind of looked at something in there, and I want to comment on something on not his video per se, but maybe some of the attitude of some of the people that didn't surprise me, but it's incorrect. It's just going to comment on a little bit later. But you know what I think is going to be coming up? I think there is going to be a major sucker punch coming to the average person that's invested in American equities in the stock market itself. Thinking back to what Mark Farber says and things like even Jim Rogers, and I know I've mentioned these two guys a million times, but hey, they're the ones I trust the most. Mark Farber will say, yeah, there's a lot of problems going on in Spain, but say the equities are down and they're way down to what the levels they were in 2008, 2009. He might buy some of that stuff because even though these companies maybe not the greatest companies in the world, they're still pretty strong companies, but the price of the stock is low. It's always the word you're looking for is value. Value. In other words, maybe this product is a little bit better than that product, but hey, wait a minute, this product's is a third the price now. That's what you want to buy. Shop around for value. Now, in the case of the American equities, I don't know why they're so high. They've been up so high, and this is what's kind of bugging me about this, because it's like staring you right in the face, but you got to be looking at, since 2009, you can say, oh, they hit this low down here, they're way down, and the Dow was down at below 7,000. Now they're recovering. But they're about they're not the all-time high, but they haven't been this high in a long time. And it could go up a little bit more, but you know what I think? 2013 is going to be, they're all warning about it. Bloomberg's saying the first quarter of 2013. I don't think it's going to be the first quarter per se, but I think it's going to be a little later. Well, I'm hoping it's going to be a little later because I want to see silver go up a hell of a lot more before I dump some of it. But, I'm basing this like on a true factoid. A lot of people won't want to, well, maybe my listeners might, but the Brother John F. listeners wouldn't want to hear this. If, say, for instance, you had a crash like this in the general equity markets and silver was up around $60, you'd see silver drop like a stone too. You would. I mean, it wouldn't go down to 26. It would drop. So I'm thinking the same thing, like in other words, look at the facts. Primary manufacturing index stinks, right? It's bad. The manufacturing's low. The unemployment's high. The manufacturing's not even good in the United States, right? Even in Germany, where it's still showing some growth, the rate of growth has declined very sharply. Europe, all the other European countries are looking bad. China's slowed down. And in the United States, I don't know, really what's in that PMI number, because we got like a fluff economy that's kind of like a lot of services. So it's not like the hardcore industrial manufacturing economy like it used to be back in, in the 50s and stuff, in the 1890s, all those wonderful great years. But you know what I mean. It's not like you're really super hardcore economy. So even if you say the PMI is a little over 50, a lot of it's service sector, and I'm not really sure just how essential hardcore that is. So I think, I can't see how this stock market could be staying up like this. And I know you could say it's not really up because of inflation and all this kind of garbage, but it's probably going to have a big pullback. And if you pay attention very carefully, pay attention to that Mark Farber guy. I don't think a lot of people really read into him or understand what he's saying. I kind of have a little different sense of what he's saying. It's like he's talking about a bigger crash than what we had in 2008, 2009. That is going to come up. That is going to come up. It's probably going to be in 2013, but not later in the year. But I'm not sure about the first quarter, but I'm thinking, maybe we're getting into the second quarter. But it's anybody's guess, but that's probably feasible right around then. I don't trust these stock markets at all. I don't trust them at all. And you know, that's one good reason to be into the metals, because really, by process of elimination, where the hell would you move to? Where would you go? I mean, you know, you go to metals or you go to Asian stocks, maybe some of these Asian stocks. But even so, like, can you trust every number that comes out of China, even with the company data? No. There's a lot of things going on in China that aren't so sweet and so great. You know, you even saw what's been going on with the infrastructure over in China, too, like bridges falling down and stuff like that, and landslides and train wrecks. You know, some of this wonderful whiz-bang expansion they've been had over the last years with the ghost towns and everything, it looked really great on paper. It looked great with all these pie-in-the-sky dreams, but some of that stuff is kind of holding back now a little bit. Generally speaking, China's going to do good, but still, it's not up there yet. It's not up there yet. Now, you know, I'm really smelling that something is going to happen with the Dow. The Dow is going to pull back a hell of a lot. Now, you know, I want to comment a little bit on something, and you know, this is what I was going to say about not Brother John F. himself, but it was like, it was one of the users or the viewers or something, and I was just looking at, I was kind of skipping around this one video, and actually you could tell what it is because I commented on it. The guy said that, and this is before Ben Bernanke was going to do the QE announcement. He says, this one person says, if Ben Bernanke does not do QE the next day or whatever the hell it is, you'll see silver pull back below 30. And you know, basically this guy was 100% right. But, you know, he got like a gazillion negative votes from, like, you know, the people that listen to Brother John F. And he's right, though. The guy is right. But Ben Bernanke actually went with QE, and that is a hell of a lot of the reason why silver's moving up. What traders are doing is they're sitting on a sideline, and I think some people do know what the hell Ben Bernanke's going to say. And that's what's moving the markets up and down. It's not really the fundamentals or what's going on with the mining and all this kind of stuff. It's a lot of it's speculation. And, you know, people playing leverage and stuff like that. Leverage can bring up the price higher. You know, in my mind, I think silver should be $100 an ounce or more. But in reality, it needs a little more QE or whatever the hell to get it up there. Because, you know, I don't know. I'm very bullish on these metals too, and I'd like to believe they should be over $100. And I know there's like all these shortages and all this garbage, but you know, somehow, you know, I think sometimes the stuff that's pushed by a lot of the people on the silver channels is a little bit too pie in the sky. But I pick up on like a lot of people that, you know, from a lot of people voting this guy down, that they just didn't want to hear that fact. That if Ben Bernanke did not announce QE, silver would have really tanked. He would have tanked by a couple bucks or something. It would have went down hard. And QE is really what's driving up this metal. It is. It is. A lot of it is. Now, I want to comment on something else. And, you know, I don't know. I was listening a little bit what Brother John F. said, but I don't know. He's got a different way of thinking than me. I know that. But, you know, this is a term he was pulling out. Actually, he pulled this out, biflation, and I was like, what the hell is this? And term was first introduced by Dr. Osborne Brown, a senior financial analyst from the Phoenix Investment Group, right? And you know, this is really a stupid BS term in my opinion. I'm just going to put it that way, because this is not something new. What he's stating here is nothing new. Nothing new. This is exactly how it does work. You know, during when there's like a bad economy and there's really severe inflation and the people's wealth goes to oblivion because the fiat money's purchasing power is going down, they start spending a bigger percentage of their income on necessities, which is like food and energy, maybe clothes, but usually food and energy. Usually food first. So what happens, like, they don't pay rent, they don't buy big ticket items. So you might see a lot of big ticket items go down in price, you know? You know, even seen this in the United States in the 70s, the late 70s, when the metals were going up. you know, and I'm old enough to remember this. If you went down on the car dealer lots, they're giving away cars and trucks and all this other garbage. They were like they were slashing the prices like crazy. But gold and silver were flying, you know, and oil was flying. They even did an excise tax on oil back then because they had inflation. That's kind of like how it works. What happened in the Weimar Republic? You know, this guy thought of a new word, biflation. He's a typical freaking Dr. PhD, conehead. What he's doing is, I was looking at this, and I don't know, PJF was explaining this, but I'm like thinking, this is exactly the normal thing. You don't need a new word for it. This guy's like, that's probably how he got his initials after his name or in front of his name. It's a bunch of garbage. But if you look at what's going on, what happened in the Weimar Republic, right? People were spending over 90% of their income on average. You know, I got these facts from someplace. I don't know where the hell I got them. I read them before. Was on food. 90% of their income was on food. But at the height of when, you know, the Weimar Republic really fell apart with the currency, you could buy a whole city block with 1 ounce of gold. 1 ounce. And it's like all the debt-based assets, like the things that people, like the banks had on loans, assets that the banks had on the books that had loans against, that they gave loans out. All that stuff went down a lot in price. It's just like what's going on in the United States. What's going on in the United States? Basically, the real estate market crashed, and all these high values on property dropped. And of course, the Federal Reserve is buying them back, just like Lindsey Williams said. The elite are buying up all the property and all that stuff. But you know, when I saw this, you know, I had a totally different take on this. I was like, biflation, huh? You know, this almost reminds me of, like, this is one reason I can't stand a lot of these people with initials after their names, because they're selling you snake oil 99% of the time. This is the standard stuff that happens during the currency collapse and inflation. You don't need a new word for it. It's the same stuff. It's the same exact stuff. You got rise of price of commodities, the essential commodities that people use, food and energy, and a lot of big hard assets that people, you know, they're not gonna take a loan out for because maybe they don't have the income to do it, or they would not want to take the new risk on there. They wouldn't do that. So the big hard assets would go down, like a lot of the properties sometimes could go down and stuff. So this is like a new word that it's the same damn stuff it always was, you know? Debt-based assets, mega houses, high-end automobiles, and other typical debt-based assets become less essential and increasingly fall into lower demand. And you know what? This is not even true what's going on right now today. Because high-end automobiles and mega houses, real expensive real estate is actually selling. It's like the medium expensive real estate ain't selling. That's what the high-end houses are selling. The high-end automobiles are selling in certain circles. You know why? Because there's bigger disparity going between rich and poor. And actually, people in really filthy rich, you know, they know what the hell they do with their money. Like when this QE came out, I was thinking to myself, you know, good. We're going to make some money on silver and gold. But you know the wealthiest people in the world? And I'm not talking about, you know, Dr. So-and-so, because doctors are idiots usually, and they don't know how to freaking invest their money unless somebody else does it for them. But, or attorney so-and-so. They might have some money, but they're probably going to lose it, which is a good thing. But, you know, the very smartest people I'm talking about with some serious wealth, they probably invested in TIPS, you know, Treasury, inflation-protected securities and things like that. And it's like they're not going to be like playing options and stuff like that, but they actually are well protected. They have some very smart people protecting their money. So they're actually the wealthy are actually getting more wealthy during this economic downturn, and the middle class is getting clobbered. And that includes a lot of the professional middle class, which is fine with me. You know, the bean counters, which I'm one of them, but I'm not going to lose out because I got silver and gold. I'm not like your average bean counter. And, you know, the attorneys and, you know, the doctors and, you know, all this freaking professional bullshit. They can go under as far as I'm concerned. But, you know, it's the filthy rich. They're not freaking losing out. They're making more money. You know, even like guys like Jim Rogers and stuff, you know, I think he's all right because he's pretty much a straight shooter. But he sure doesn't give you a whole hell of a lot of information when he talks, you know. But he does state he was in agriculture, right? That guy's got to be making out like a fat rat. Look what's going on with the drought situation in the United States. Look how much the agricultural prices moved up, and look how much they're expected to move up. Look what's going on with the drought situation in Russia, and also problems with the weather in Europe, and also another drought situation or something in South America. So not this time, the agricultural output is actually greatly been cut down. Now, when you like in the United States, it's actually the worst it's been since 1936. This drought. So Jim Rogers, he's making out like a fat rat. That is why the mega houses and mega cars, you know, real expensive cars, the stuff that this Dr. Professor Osborne Brown is talking about, actually that's not even going on right now because that stuff's selling. That stuff is selling. I'm not talking about a $300,000 house. I'm talking about the ones in the millions. They're selling, believe it or not. You know, that's not like the 1%. That's like, you know, less than a 1 basis point. Those kind of people are actually making out like a fat rat. And you know where it's coming from. It's coming out of the middle class, except for the middle class that are holding silver and gold. So by process of elimination, you know, really, that's one way to look at where the best place to keep your money, silver and gold, because stock markets are going to go down. This is pretty much a guarantee. You know, and I'm looking at this going up like this. This is all from QE. All from QE. And they're also using a plunge protection team behind the scenes to keep up these equities. I almost guarantee it. You know, it's been around since the Reagan days, and they use it. And, you know, look what happened. And, you know, all the other countries had some more corrections. Like in Europe, the markets are down. Why should they be up so high in the United States? And you know what it is because, you know, probably what's going on too, and I know there's always intramural competition between the United States is one big power structure, and then there's Europe is another big power structure, China is another center of power, and Russia. Basically, those are the big four in the world. And one way to actually keep yourself on top, and this is what I think this goes on in the United States, and you know we heard this from like George Soros did this supposedly, is like, you know, you would have an attack on the euro so that keeps the dollar up more, you know, a little bit longer, you know, but it's like you don't know how long this game is going to last. That's the thing. So you know, I almost suspect that gold more than any of them is probably going to, even though it's up quite a bit, that's going to be the one that's going to probably really hold together the best during any kind of pullback, because it's going to be a problem with the budgets in the United States, ironing out what's going to be coming up in the next fiscal year. Moody's is probably going to downgrade the debt. They're talking about it, but you know what? They're going to do it. They're going to do it. And when that happens, that's it. Gold is going to have to go up. So, you know, I just had to point out some of this stuff, because what I'm saying is stock markets in the United States, they are going to crash. They are. I'm just kind of putting two and two together from like what we, you know, have been seeing like over the last months, and actually listening to Mark Faber. He's been warning about a bigger crash. And, you know, if you start looking at, you know, what you probably got going on here, even technically, maybe is a long-range double top, right? And once it starts breaking, it's going to break all the way down. And you know what's going to probably break it is problems with the U.S. budget. So you might see gold be the only thing that really flies the most, even more so than silver. And you know, I've been saying this all along, and I'm probably the only one that says this, but you know what's really going to be bullish for silver is a war in the Middle East. Not the day it starts, but when oil prices start taking off like crazy and there's tensions in the Middle East. I don't know what the deal is, but oil, it's just like when we had, like, gold goes up when there's tensions, gold goes up when oil goes up. But if oil goes into this spectacular bull run that Lindsey Williams has been talking about for the last 2 years, it has not materialized yet. When that happens, silver is going to fly. Silver is going to fly. So, you know, my game is I don't want to sell too much physical. I'm going to sell a little bit, but if it goes up to like $60 or breaks a new all-time record high, and it does it in the next 4 months, if it does it like in early 2013, I'm definitely selling some physical. Some. I should sell all of it, but I don't have the balls to do that because my thought process is that it's going to pull back hard before it starts taking another hard run up. That's what I'm thinking. But I don't want to risk it. I'm playing very conservative. And but I think that's what's going to happen. You know, I remember like reading something from Jesse Livermore's book. And you know, this is very true. And it's very true, good example, because it's like playing in the stock market or playing with commodities. It's like shooting a gun. You know, it's when you're using it for target shooting and it doesn't fire back, it's a lot easier. But if you're trying to shoot, you know, you're in a duel or something like that, or you have an adversary, an enemy or something, you know, an Iranian on the other side, and you're shooting at him and he's shooting back at you, it's a hell of a lot harder. And, you know, that's the same way with the markets. It's like I could be a hell of a lot calmer when I'm not throwing my money down on there and think a lot clearer and hold out a lot better with my convictions. You know, when I'm just doing it as a psychological exercise versus using your own money. And you know, I've been sitting pat lately, but psychologically, you know, that's a lot easier. But I have been right in my assumptions. I was thinking that silver was going to start taking off here in the last month, and it did. You know, and I did state that on my earlier videos, but you know, and I did put some more money down on it. I don't know if I I didn't hit the bottom, you know, or pullback, but it pulled back some. And I'm realizing I bought some more on an ETF because I realized that by the end of the year, I think it's going to definitely be over 40, maybe even closer to 50. And that's probably when I'm going to dump some physical too. But if I got the timing right on this, I think the Dow is not going to crash before the election. It's going to be sometime after the election because these guys are all like, you know what caused the Dow to crash like back in August of 2011? Like it didn't crash, but it was them bickering over the budgets. And you know what they're doing? They're pushing this budget fight off, the main fight, till after the election. So, you know, it might be after the inauguration of whoever wins, you know? So this is my analysis on this deal. So I'm thinking that the markets might crash, you know, 2013, maybe in March. I don't know if it's going to be March or February or June or whatever, but in 2013. So I'm hoping to guess this right and get the hell out of some of it and get back into it cheaper. But, you know, my comments on this bitflation thing or biflation, whatever the hell that word is, that's amazing that somebody comes up with a new word like that. You know, it's not something against Brother John F., but he was looking at this from his Dr. So-and-so. And I'm like, that's not how I read this guy. This Dr. So-and-so is nothing but a freaking BS artist coming up with a new word. It always works like that during high inflation. The people's money is being spent on food and absolute essentials and things like that. And big ticket items like buildings and stuff like that, and cars and farm tractors or something or whatever, they're like going lower and lower. But ultra luxury actually could be a hot market during those times because it's a small niche market, and that's actually what's going on right now. So the hell with people with initials after their names. They're a bunch of eggheads. Hopefully I'm going to give you guys some straight scoop as to what to do. I'm going to play it this way. That's what I'm going to do. I'm hoping I'm not steering anybody wrong. But I'm pretty certain this is how it's going to play out. We're going to have some serious moves up in the metals here. It's going to still go. And then it's going to be a pullback. And it may be over the budgets and stuff like that. You know? So, probably going to be 2013. You're going to see a severe enough pullback. But, you know, it's going to keep going up from there. It's going to keep going up from there. So, you know, and I guess the only way you can really tell the best point when to sell is going to be your Fibonacci points. Fibonacci. So, you know, that's the only thing I could see mathematically that ironclad you can actually say that technical analysis is going to work. Fibonacci. Over a long range. It doesn't work that well over real short, you know, going over the day to day, but over a longer range, it sure seems as hell like it's going to work. So when silver gets up to new record highs, you know, I'd have to say it's going to be, you know, maybe up to about $70 that silver might hit. And if it gets down to 31 ratio, that is definitely, if it gets up there, that is definitely start selling that stuff. Start selling it. And I know the guys out there in the silver blogger community, I know BGF, he'll probably be saying, I don't know what he'll say. We'll find out what he says if it ever gets to there. But I don't know. A lot of these guys, him or any of them, will be saying silver's going to be going up to $100 an ounce, $200 an ounce. And I think it is, but it's going to have a major pullback before it even hits 100. That's always been my point. We'll see if I'm right. But that's how I'm going to act. That's how I'm going to act too. So I'm not just saying it as an intellectual exercise, because I'm realizing I want to win on this game too. I don't want to. It's not an intellectual exercise. It's a game that means you know how much money you receive, and that's important to me.